All right, we're going to quantify the foreclosure backlog coming in 2021. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy Patrick here, your host, putting the realism back in real estate. Today is the 1st of December. Hope you're doing well. Hope you had a great Thanksgiving holiday week. I know I did, got lots of stuff done. Did some work, did some hanging out with the family, yada yada, the whole bit under the whole COVID blanket moratorium thing, etc. I know, not fun these days, but again, hope we made the best of it. So, as the housing market turns, it still continues. And today we're going to talk a little bit about what to expect in 2021. So, first of all, if you're not already a subscriber and you enjoy the content I put out in my channel, if you could please smash that subscriber button and subscribe, that would certainly make my day and I'd be very appreciative. So, thank you very much. And let's move on here. So, we're going to focus on foreclosures, which is what I've been doing over the past week or so. I took a break today from the foreclosure tour. Next video will probably be a foreclosure tour video, number 4. We'll focus on California property locations for that one. It's just FYI, it's a lot of work to produce that. So, but I thought this was needed as well too, because I think part of the issue is quantifying what's going to happen in the future. I get a lot of people who contact me asking what I believe is going to happen, and they don't know what's going on in their marketplace. They want to know more, and I figure, we can see from an overall perspective what some of the, we'll call it, people that should know what's going on with the data are telling us, so we have an idea what to expect in the future. So there you go. So what we're going to talk about right now is the auction.com is a website. They sell data. You can bid on properties through auction.com if they're on there. And this is basically their Q4 2020 distress market outlook. So I picked this off and I thought it was quite interesting, and I think it substantiates a lot of what we're talking about here. And again, that's what I like to do. I like to find the information just to make myself feel better about what's going to happen in the future, to be quite honest with you. But at least, I look at going, I'm not, smoking crack here, and I know what's going to happen. And I'm pretty confident, at least in my area, what's going on and how to approach it, which is what we should all be doing, looking ahead, not looking behind. So they put out this report. It's not too long. We're going to go through it right now. It has some interesting things. And the number one, I guess, report they were not thinking about the report was, hey, distressed property demands jumped to record highs during pandemic as constrained supply slowly returns. So basically, what is happening during the past few months in the pandemic that we're in? Clearly, what we've been lamenting is lack of inventory, high prices, lack of inventory. So what are people going to do? Primarily investors in this point in time, they're going to look at other sources to get property. So they're going to the foreclosure auction. They're going to the REO, like the real estate owned bank auctions. They're going to third-party sites like auction.com, like Hubzu, like Zome, whatever, and they're bidding on property there because, again, we're kind of in this sort of, standstill, limbo, whatever you want to call it. A lot of stuff's not moving. So basically, a vacant or abandoned foreclosure volume rises to 6 months high in November. And why is that important? Well, it's because essentially, nothing much is moving, so people are going to gravitate to available properties and do what they can to bid on them and access them, and that's the whole point here. So the average, this is summaries right now, okay? So the average price per square foot and bids per asset reached new all-times high, for REOs sold online at the auction. Demand for occupied REOs is a year-to-date high. And just so you're not aware, REO stands for real estate owned. Those are properties that have been foreclosed on via the mortgage foreclosure, and now they're back by the lenders taking them back into their REO, real estate owned inventory, and now they're trying to sell them either via the MLS or in this case via third party online auction sites like an auction.com. All right, and just as an FYI, when I produce these videos and I basically are looking at the reports here, this is stuff that's available on the internet. So it's not like I'm taking data that I don't own or anything like that. This is searchable, findable. I just summarize it and give my 2 cents worth on this. So anybody can find this information if they look hard enough, okay? One of the points they want to make, though, is building backlog of foreclosures could exceed 1.1 million by Q2 2021, which I think is important. We're going to talk about that towards the end of the video. Other high-level findings of the report: increase in share of vacant zombie foreclosures, States with the most foreclosure volume returning in September were Ohio, Illinois, Florida, Alabama, and Texas. States with the most online REO auction volume in September were Illinois, New York, Maryland, Pennsylvania, and New Jersey. Foreclosure sales rates and price execution relative to credit bid increased to 7-year highs. FHA and VA foreclosure inflow were up in the third quarter, foreshadowing uptick in future foreclosure volume. In states with the biggest increase in foreclosure inflow with respect to Q3 2020 were Maryland, New Hampshire, Alaska, Oklahoma, and Kentucky. So again, we're starting to see some action here, and that should at least make us happy. And again, there'll be more coming, so just hang tight, and we'll get to it in a second here. So again, the report really talks about some highlights here. And, foreclosure volume rebounds to 6-month high in September. So the September volumes are 22% of higher than year ago levels. September volume at 22% of year ago levels because of the moratorium. They're not foreclosing on property, so therefore what is getting through is certainly way less than the year before. Volume dropped to post-pandemic low of 2% in April. Basically, the number of residential properties brought to foreclosure auction either sold to a third-party buyer or reverted to the lender as a real estate-owned REO increased 24% in September from August to a 6-month high, according to data from auction.com marketplace. But the 2020 foreclosure volume in September was still down 78% from a year ago, representing 22% of the September 2019 volume. So even though we saw an uptick from August on a month-to-month basis, we're down big time from a year-over-year basis. That's the way it is. States with above average foreclosure volume were Colorado at 92%, Oklahoma at 86%, Kentucky 56%, Arkansas 54%, Indiana 49%. States with the most properties brought to foreclosure auction in September were Ohio, Illinois, Florida, Alabama, and Texas. So obviously the first 3 or 4 states there are no surprise there. And we'll go to the next slide. Okay, so just again, high-level stuff here, but the whole idea is giving you an idea of where things are at. This is the foreclosure supply by state. So obviously blue, the return of foreclosure auctions by state. So the darker the blue means less property are coming to auctions. And as we go to light blue to light green to darker green, show states that have an increase in homes that are going to foreclosure auction. This all depends on nature of the foreclosure mortgage mix in that individual state. And also, typically, it's the individual state's, how could you put it, their foreclosure process and whether their state has additional moratoria or not with respect to, I guess you could say with respect to what goes on locally there. Because I know that, for example, the state I'm in Florida, for example, we do not have a state moratorium anymore. The governor has decided to fall back on the moratorium that was imposed by the CDC, which has some relaxation to it, which that's why we're seeing more things get scheduled to auction right now. So it just kind of shows you where we see things happening. And, here's the deal. When I look at Florida, where I'm at, going, okay, we didn't see that much return because they already were ahead of the game. So when you have states that had nothing and suddenly have something now, clearly their percentages are going to be a little greater comparatively speaking here. All right. So increase in vacant foreclosures fueling rebound in supply. So the zombie foreclosure rate increased to a 3-year high in 2020 for Q3. Most vacant foreclosures are in New York, Florida, Illinois, Ohio, and New Jersey. So basically, the actual number of vacant foreclosures also increased in the third quarter, up 4% from the previous quarters, and increased in 30 states, including Illinois, Ohio, New Jersey, Pennsylvania, and Indiana. States with the most vacant foreclosures at the end of Q3 2020 were New York, Illinois, Ohio, and New Jersey. So what does that basically mean? If there's vacant foreclosures, that typically means that either the lender has already, I guess you could say, foreclosed on them, all right, and they're sitting there vacant, so they're available for purchase via the third-party auction, and that's how that works there. Now, I call that the shadow inventory. Also, with respect to the shadow inventory, I include the pre-foreclosure side too. So that's where we're not quite too clear here, and I do believe that this probably includes vacant pre-foreclosures as well. But interesting, though, is the fact that you take a look at that on that the gray shaded area there. That's a quote from somebody. Her name is Julia Gordon, president of National Community Stabilization Trust. And she basically is saying here going, you want the right tool for the job, and stopping the foreclosure process as a whole for every property, especially vacant properties, is not the right tool. When a property is abandoned but does not go for a foreclosure in a reasonable time frame, it invariably will blight the community. So that's kind of the process here, is that, so this, clearly lenders and servicing companies and groups like Community Stabilization Trust, they look at it going, well, a vacant property is an eyesore. It's a blight in the local community. It brings property values down. It's a harbor for vandalism, for squatters, for illegal activity, danger, anything that you can think of. Well, I'm sure in some locations and situations it does contribute to that. But one of the things I do want to point out, though, is that you have to take a look at a vacant foreclosure. If the lender is taking it back, all right, and it says they're vacant, that should be rectified. They should move that property. But as far as I'm concerned, if the property is still owned by the homeowner, it's vacant, it's pre-foreclosure, the homeowner has the right to the due process of the foreclosure process, all right, their due process in court or their notice of default process. And there's always an opportunity to prevent the foreclosure from happening in the first place with a short sale. And quite frankly, the short sale, at 99.9% of the time, is a better solution than a foreclosure judgment. All right, why? Because a short sale is a settlement of debt. All right, typically it's a real estate transaction. Okay, it's a settlement of debt. It's done at closing with a title company or escrow company, so it's okay to buy. You'll have title insurance on it, the whole bit. They're not being evicted from the homeowners aren't being evicted from it. Sometimes we can get the homeowners, moving expense money, relocation fees paid for by the lender. It's less hit on their credit as well. They avoid the foreclosure judgment, which the lender will pursue them after the fact. So if you let it go to foreclosure, you've lost your right to defend or work against that judgment, and they're going to come after you, and that's what's happening these days, and that's a motivation for homeowners to do a short sale as opposed to letting it go to foreclosure. But again, from a lender perspective, they want it to go to foreclosure so they can basically sell it at third-party auction, get the money, or sell as an REO and make money on it as well too. So unlike the last housing crisis, lenders now are looking at this as profit center as opposed to just plugging the holes and mitigating the disaster. Oops, too fast there. Okay, REO supply fades to 40% of year-ago levels. So yes, so because we're not foreclosing on properties because of the moratorium, the real estate owned volume is down, which means it's down coming back on the market via the MLS. So there's less homes coming on the market, less cheaper price homes, and also with these third-party auction websites, there's less supply there. So they're probably, well, they are, because we'll talk in a second, they're going to see the inventory crunch from their perspective now, which actually is to their benefit because they're going to get more more price, a better price for these, abandoned and, we'll call it distressed homes. So most REO supply right now is in Illinois, New York, Maryland, Pennsylvania, and New Jersey. So basically, essentially, number of bank-owned homes brought to auction in September was 40% of year-ago levels, meaning REO supply decreased 60% from a year ago, according to data from auction.com. So ultimately, in the end, here states with the above-average supply of REO auction supply relative to a year ago is Maryland, Nebraska, Minnesota, Massachusetts, and Oklahoma. States with the most properties brought to online auctions in September were Illinois, New York, Maryland, Pennsylvania, and New Jersey. All right, so we can take a look at that, the one graph here, or the REO supply by state. So again, the darker blue is less supply, the green to darker green is more supply coming on. And again, I look at going, well, we're seeing supply maybe in locations they're not quite as booming as we would expect potentially. It just depends on what's going against state level, volume level. But I look at going look at Nevada being the dark blue there. Well, of course, people want to buy in Las Vegas, so therefore, even though price points are higher, they want to buy distressed property there. It's a hot spot for investing, and you can see that, again. There's not much there, so we're seeing less supply. And speaking of Las Vegas, I'm looking to establish, some presence in Las Vegas. So would like to speak to real estate agents who are out there. I have buyers who are buying primary and investment. So I'd like to talk to people on how we can work together. And again, it's not going to be just me handing off leads to you and you go your merry way. It's going to be a structured agreement, etc. So if you're interested in working with me in that capacity, please send me an email. All right. So sorry about the digression there. All right. Too quick on the fingers here. Market tailwinds help sellers dispose of more aged and rural REO inventory. So this is kind of interesting. So obviously one of the things that we've talked about and the media has talked about over the past few months is the fact that homeowners or potential buyers are leaving or not wanting to be in the urban areas where it's densely populated and in apartment complexes or rental properties, etc., condos, co-ops, whatever, and they're looking for more rural, more suburb, and they're wanting more space, etc. For two reasons. Obviously, for COVID, more work at home, and for cheaper property. So we're basically seeing the fact that average days in inventory nearly double for REO sold in September compared to pre-pandemic levels. And basically, what that means is that REO property sold in September via the online auction has been in auction inventory for an average of 99 days, down from a peak of 128 days in July, but still nearly double the pre-pandemic low of 58 days in February. So the point is that it's taking over the pandemic. It took a little longer for lenders to dispose of the REOs via the third-party auction sites. All right, sales rates for our rural REO properties are up 27% for January. Okay, so basically it's kind of like, hey, COVID slowed down everything, but what we're seeing though is an uptick in in timing now, so it's going to jump back up, or sort of decrease. So more people are going to be buying properties, cheaper. But we're seeing a rural property increase as well too. So it's just interesting to see. And again, if you want to quantify things, see what we're dealing with here. That gray box says the rising demand from the 6 million potential buyers using auction.com. So there's 6 million accounts, I guess you could say. People have registered with auction.com. Potential buyers, whether there's 6 million actual buyers is probably, you got to take that with a grain of salt, right? But the point is, look how many people have accounts with auction.com and have at least looked at property here, right? Has helped our sellers dispose more aged and rural assets at fair market prices. This is the population that has been historically been tougher to match as an interested buyer. So less investors and less buyers were looking to the rural REO foreclosure market, but now we're seeing an uptick in that, which just shows how the market's shifting and the needs are changing for people here. This is interesting. Foreclosure sales rate increases to 7-year high in August 2020. So what that basically means is price execution relative to estimated market value at more than 6.5-year high in September. So what we're seeing here is the foreclosure sales rate, which is a percentage of all properties bought to foreclosure auction that sold to third-party buyers, hit a 7-year high of 55.6%. Okay, so what that basically means is that if 10 properties or whatever 10 properties are going to foreclosure auction today, 55% are going to be bought by third-party buyers. Okay, third-party bidders, and the remainder are either going to go back to the lender or that auction will be canceled for various reasons. Okay, canceled by the county, canceled due to loan modification, canceled due to the bankruptcy, whatever. So the point, though, is that we see more and more investors are going to be playing in the foreclosure auction market here. Now, I want to be clear here because I'm talking foreclosure auction. There's two levels of auction. There's mortgage foreclosure auction, which is typically done by the county, and then there's this report, which is from auction.com, which is a third-party website. So what they're basically talking about is stuff they're seeing on third-party platforms, all right? So I'm not. That's how they operate, but I guess this piece of information is brought to foreclosure auction. Okay, so that's not the REO auction, that's the foreclosure auction. So it is the first mortgage auction, even though these guys show the information, they track it, but you really can't buy via auction.com at the foreclosure auction, the mortgage auction. Usually you have to set up an account with the county or whoever is working or controlling that auction. Okay, just keep that in mind. So again, a little misinformation here, but I'll straighten that out right now. So 55.6% are being bought at county auction. For mortgage foreclosure auction, 55%. Okay, and then if it's not bought at the county auction, it's reverting to the lender, which then may put it to these third-party auction sites, which is sort of what the platform we're talking about right now. So states with an above average Foreclosure sales rate in September include Arizona, 78.6%, Wisconsin, 75%, Georgia, almost 74%, Indiana, 71%, and Virginia, almost 68%. So that's huge, okay? What I mean by that is, so if you're talking, like, look at Arizona. We know what's going on in Phoenix and the market there. So, think about that. It's going to, if it's going to be sold at the Phoenix local county auction, Maricopa County, whoever runs that, that's almost 80% of these homes are being sold to third-party bidders at that auction, which is huge in that marketplace. So we can see that's why the market's growing there. It's the number one location for year-over-year, property values, and we see what happens now. So, all right, foreclosure sales price execution hit 7-year high. Okay, what that basically means is average price per square foot was trending lower with shift to vacant or abandoned properties, which is interesting. But the average price per square foot for foreclosure sales September increased to a 3-month high of $78 per square foot. So we saw over the sort of pandemic months when everything was shut down, because of the moratorium, that people were gravitating to vacant homes, and vacant homes tend to sell cheaper and maybe have more issues, etc. So that's what they were finding on the REO auction side there. But what we see here is that the per square foot price for foreclosure sales is $78 a square foot, and which is not bad. Certain locations are going to be cheaper. Certain locations are going to be more expensive. Right? Depends on the mix. You know what I mean? And again, depends on how they're looking at it. So I know that if I'm buying a auction property or in Fort Lauderdale compared to here in Tampa, I'm going to be paying more per square foot in Lauderdale because it's the higher price market. So that's just the difference. So each market is going to drive its own kind of price points, but we're talking averages here. Bidding competition for REO auctions increases to a record high in September. So what this basically means is that bidders per REO sold at nearly an 8-year high. Most bidder competition in New Jersey, Maryland, and California. So bidders for REO. So bank-owned REO. So this is where we get flip-flop with, is it an REO auction or foreclosure auction? So in this case, it's bank-owned because this is what they can track. They can't track the actual foreclosure auction, the mortgage foreclosure auction. So bank-owned REO properties sold via online auction in September had an average of 12 bids per asset, up from 11.1 in the previous month and up from 8.3 from a year ago. Okay, so basically, what we're seeing is the fact that more people are gravitating to these sites, saying, "Hey, I'm going to bid. I want to look for properties, etc." Which, again, same thing, means more competition, which means prices will be driven higher. So, states with an above-average bids per REO asset sold in September included New Mexico, California, Maryland, New Jersey, and New York. All right, so that's kind of your your top states there. So again, that basically means even the local REO auction markets now are increasing. So like we see increase in the retail market price points and low inventory, we're seeing that in the investment side now, which doesn't help. It drives prices up from the investment component where you should be getting discounts. Yeah, you're getting discounts now, but not like you used to. So interesting to see how this is starting to mirror the retail real estate environment. Now, when we look at the average price per square foot at REO auctions reaches record high in July. So again, they're going back a few months ago here, but the point is, price execution to seller reserve hits all-time high of 104.5% in September. So what that basically means is that when there's a foreclosure auction, a mortgage foreclosure auction usually held by the county, bidders are going to bid, lenders going to take the property back. The lenders will bid to a point where they get their number and what they need out of the property, and then they stop. If third-party bidders keep bidding, then the third-party bidder can take the property. The lender's got their money, all right? If nobody bids above the lender takes the property back, and it becomes in their REO full, all right? So in this case, average price per square foot for REO properties sold via online auction reached an all-time high of $87 in July per square foot, and the average price was slightly below that all-time high in August and September, but well above levels a little while ago. So again, you're going to see different locations are going to have different price points, but this, we'll call it price execution to seller reserve ratio. So obviously, when you do the mortgage foreclosure, the lender's going to bid to where they need to bid, and that's it. Whereas an REO online with these third-party sites like auction.com, and again, I'm not knocking these guys, I'm just telling you how it goes, they typically have reserve bids. So, it could be, what this basically means is that their reserve bid was $100,000, and that, on average, and that the average buy was $104,500. So we're seeing the fact that, there's a, the reserve bids are being met, and they're going above reserve bids to win the auction. So interesting. States with an above average price per square foot in July included California, New York, Massachusetts, Rhode Island, and Florida, all above $119 per square foot. So that is kind of expensive. I know what the per square in Florida, well, at least where I'm in my counties and area, I track that. So I know what the per square foot price is in my local counties on the mortgage foreclosure auctions, because I actually spend the time and mine the data and literally take my calculator, and it's a laborious exercise, but I know what the per square foot prices are. So I have the intel on that. So I can tell you that, again, when you look at Florida being $119 a square foot, on the REO auction, it depends on the location in Florida. That's not that great a price, to be honest with you. Okay, but it just shows that people are going to these third parties because it's a little easier to bid there, and there's a little more control. It's not as cutthroat and as dynamic as the actual mortgage foreclosure auctions held by the counties. Okay, so just realize that you're going to see ebbs and flows on a monthly basis as to where these auction prices are going. Right now, again, with less inventory, they're just going higher and higher, which is unfortunate. So now this is really interesting, what I thought Stefan here. Okay, this is occupied REO sales rate hits year-to-date high. So what that basically means is that you've bought an REO from the lender. So the lender took it back at foreclosure auction. They put it on their third-party auction. You bought it there, and you won the bid. So it's your home. Guess what? People are in it. All right. So you've bought a home. The lender's already taken back. You've bought it at a third-party auction, and the previous homeowners or tenants are still there, and you got to deal with that. So I thought this very interesting. Occupied properties accounted for 46% of all REO sales on auction.com in September, down from a year-to-date high of 49% in August, but up from a year ago to 31%. And this is interesting because, I'll give you a philosophy here, right? The philosophy is, well, actually, wait a second here. Let me digress. I digress. These two gray boxes here, the bottom left, it says, this is a buyer saying, it doesn't bother me about evictions because I'm not going to evict anyone anyway. I don't want to kick people out. I want to keep people in. So an auction.com buyer who's purchased REOs in many states, right? And then the other box on the right there says, accelerating home price appreciation, resilient rents have made occupied REOs more attractive to real estate investors looking to hold the properties as rentals while keeping the current occupants as tenants, said the senior vice president of auction.com. Well, let me put something in perspective here. They went to foreclosure auction. They didn't leave for various reasons, and you bought it as an investor, so you're going to let them sit there and you're going to pay rent. Do you not think that at some point in time they're not going to pay you the rent as well? Think about that, right? So one of the first rules on cash flow properties is that, put it this way, you're buying distressed properties, you tend not to want to keep the current occupants in there. You want to move it out and start fresh, because there's a couple things here. They're going to treat it, they're going to treat it like they treated the property beforehand, which could be disregard. They could give up on it, damage it, not take care of it. Number one, it's going to cost you more money in the end. And two, I think they're highly unlikely to pay a current, pay rent or keep current for X number of months. So to me, that's a risk factor. But it looks like people are going, what are we going to do here? We're going to we're going to do that. But interesting here, though, notice that underneath the headline it says, buyers of occupied REOs on auction.com are required to sign a community stabilization pledge to abide by the eviction moratorium. So what these guys are doing, they're saying, okay, you can buy this auction, and now we're transferring you can buy this home at our online REO auction that's already been foreclosed upon. So it's our problem with whoever's in there, because we're not forcing them out. And we're going to transfer, what we're doing, we're transferring that problem to you. So I guess what they're saying is that you as a buyer of this asset are going to, abide by the eviction moratorium, not throw people out. Just FYI. So I like how they're passing that on to the new buyer and kind of washing themselves of that situation. Is it going to help some people? Certainly it is. But I look at it going, why would you want to do that as an investor? There's pros and cons, I suppose. Again, you got to figure it out based on your business and what you want to do. All right. FHA and VA foreclosure inflow up in Q3. So what this basically means is that we're seeing more FHA and VA foreclosure increasing as a trend. FHA insured up 30%, VA up 84% from the previous quarter. More than half of the inflow typically completes foreclosure process within 6 months. So ultimately what we're seeing is the fact that that segment is growing. Now, I'll talk about, as you can see, we've talked about before in videos, the FHA delinquency information that's put out by FHA. I last talked about the October stuff in my foreclosure tour of America videos. I'm talking about that per locations, per metro locations as well too. So we know that the FHA delinquencies are increasing. We know that the seriously delinquent are increasing as well too. So guess what? Here's the deal. And it just shows that they see the trend too. So the overall trend is that you're going to see more of these type of loans into the foreclosure inflow process. And foreclosure inflow trends predict future foreclosure volume. So obviously, some of the states we haven't seen an increase yet, just because processing hasn't started. Some that has, is increasing. You can see like the kind of goldy yellow color there, the darker red is where it's increased significantly. And a lot of that too could be states that have had zero foreclosure or very small foreclosure inflow, are starting to pick up the pace. And that's why it's all relative. That's why you're going to see higher a percentage because you were low to start with in the beginning. Like Florida, we've always had decent, numbers going in. So for it to go up or down is not material as far as I'm concerned, by a few percentage points either way. So that's kind of what's happening right now. And we go check it out here. This is what's most important, okay? Building backlog of foreclosures could exceed 1.1 million in Q2 2021. What that basically means is that backlog building among mortgages in foreclosure or delinquent, but not in forbearance. So this, we've talked about this before. There's this number of mortgages that are not covered by any forbearance program, whether people have chosen not to do it or they can't do it. The point is there's about 1.1 million out here. Okay, you're going to see maybe people say 900,000, maybe a million, whatever. So we're in that kind of million range. Okay, so what auction.com is saying is that we're going to see this backlog of foreclosures that basically, in Q2 2021 of about 1 million. So they're going to be in different stages of foreclosure. They could be in the beginning stage, they could be in the middle of the process, they could be having their auction dates getting set, and they could be going to foreclosure and losing their home at the auction. So that's all going to start happening quicker as the moratoriums relax and as certain states relax their local moratoriums. As I said, down here in Florida, we're seeing an uptick in foreclosure auctions being set. I saw them in November because that's the starting point. Seen them increase in December. Already seen them hit larger in January, and we're going to see more in January. And I'm starting to see February's calendar start to fill now too. So it's happening down here. FYI, you may want to talk to me about that. All right. Now, this component is not in forbearance. So the second, bullet paragraph there says, growing number of seriously delinquent in forbearance could also add to the total. Yes, it could. Why? Because bottom right corner there says, lastly, Black Knight data shows 1.8 million seriously delinquent mortgages in forbearance. To date, forbearance exit outcomes from the Mortgage Banker Association indicate nearly 9% of those will exit in default with no loss mitigation. All right. So what that basically means is people will bail and they won't seek any other I guess you could say options and loss mitigation, and they're going to fall in that foreclosure bucket. So that's interesting. So we've got 1.1 million coming for sure that aren't covered, and we've got 1.8 million seriously delinquent mortgages. We have mortgages that are not seriously delinquent but are going to get there in forbearance. Okay, roughly forbearance now is like 2.7, 2.8, give or take a few hundred thousand. All right. So how do I summarize this? Well, this is the potential for 2021 happening right here. Okay, summary: 1.1 million foreclosure backlog. These are not covered. These will become foreclosure issues. Okay, 1.8 million seriously delinquent in forbearance. Now, the seriously delinquent means they're greater than 90 days down in their mortgage. All right, and when we're looking at some of this, I can tell you that the more serious delinquent, the tougher it is to come back to bringing your mortgage current and getting back on track. Also, a lot of these seriously delinquent are people that already did a first wave of forbearance and they re-up their next forbearance plan. So I think there was like, at least, 70% or 80% of people in forbearance right now have like re-upped after initial 6-month term. So I look at a lot of these are going to be heading to the foreclosure dockets anyway. Some will do, loss mitigation. Some may have some solutions, but if 80% plus had to re-up in forbearance, chances of them coming out are going to be kind of slim. All right. So I look at it going, that's almost 3 million future foreclosure properties happening in 2021, 2022, whatever. Some are starting to become available now. As I mentioned, I'm seeing that right now in my market. Others, as we work through 2021 and going forward, there will likely be more on the way. So what's the point of all this? The point is trying to quantify this. Listen, if 1 million properties became available right now in the market, do you think that would make a material difference? Yes, it would. If 1 million properties were available at a cheaper price, would that make a difference? Yes, it would. Because we only track on an annual basis, we do from the retail perspective about 5.5 to 6 million on average homes per year are being bought and sold. That may change as inventory decreases. That could actually get less and less. So that's the whole point of the marketplace. So if these homes were available at lower price points, certainly that would change the dynamic of the market that we're in right now. So that's, got to keep that in mind. We got to go after these. So the whole point of my presentation is to let you know what's going on, so you see the potential volume coming down the road. 2 housing narratives in play. K-shaped housing market. Bottom part of the K will grow. Right now, the housing hype hacks that talk about how great the market is, we don't see the distress coming online. Right? It will come. It will change things. We're going to be patient. Changes are happening. It's underway in certain markets. Happening in mine. Please contact me if you want more information. Now, there are properties available right now. You just witnessed it, okay? Stuff is coming on. Stuff's going to auction. Why are you waiting to get involved? I know people, like, how do I find a deal? Contact me, okay? I'll tell you and show you how to do it, all right? These are not just going to materialize on your doorstep. Your real estate buyer's agent suddenly not going to have access to 100 of these great properties in your market where you can just leisurely go through and look at them. It's going to be a different ball game. So that's why I'm trying to educate people and saying, we got to look at this and we got to figure this stuff out. All right. Very, very important here. So we will have to compete with institutional buyers and other large investors for these properties. We have to get ahead of them and beat them to the auction. That's what we do. That's how we do it. We have techniques, and we'll call it special ways to help homeowners buy them more time on their property and then secure buyers and make everyone happy with the deal in the process here. So it's a win-win situation for everybody involved here. All right. So as I always say, if you are an investor, give me a call. If you want to become an investor, give me a shout. If you're involved in an equity fund that's looking to buy properties, let me know. If you want to start a fund, talk to me, okay? And you want to get properties. If you have a 1031 exchange need, because I'm getting calls on that, right? People are going, we sold a property, we need to identify our next purchase for the 1031 exchange, give me a shout. If you're a foreign investor from Canada or other locations, drop me a line, okay? I want to talk to you. Or if you just want to purchase a better priced property, give me a shout. I'll give you a consultation, talk about, let you know what I'm talking about, seeing if we can figure out how to work together. How do you get a hold of me? Right there. That's my email. Send me an email with your contact information. We'll set up a time to talk. And that's the scoop. So first of all, again, I want to thank everybody for all the views over the holiday week. Everyone was looking at the foreclosure tour, which I appreciate. I'm going to hit probably next couple of days the next video. Again, they take a little bit longer to go through and make up because it's a lot more research on my part and dragging information in, as you can tell. So, so thank you for the views, likes, comments. Hit me up. Look forward to speaking to you later on this week. All right, everybody, take care.